Two coworkers get raises the same week. One says, "Finally, I'm buying a place." The other says, "I think I'm going to keep renting." The room goes quiet. Owning a home isn't a financial decision most people make. It's an identity decision. So let's actually run the numbers, without the guilt trip attached. A one-bedroom apartment costs $1,600 a month. A comparable condo costs $340,000. Put down 15, finance the rest, and the mortgage payment alone lands around $1,950. Stop right there, because most people stop right there too and think easy decision. But a mortgage payment isn't the cost of owning. It's just the appetizer. Add property tax, roughly $280 a month. Add insurance, $95. Add a maintenance reserve, about one of the home's value yearly, or $283 monthly. Total real cost of ownership, around $2,608. Compare that to $1,600 rent. The true gap isn't $350. It's over $1,000 a month. People assume that entire gap is wasted if you rent. It's not. Owning has its own wasted money too. Interest, taxes, repairs. It just has better PR. In year one of a mortgage, most of your payment services interest, not principal. You're paying the bank first, and yourself much, much later. The real comparison was never rent versus mortgage. It's unrecoverable cost versus unrecoverable cost. A friend buys a place, feels accomplished, gets transferred for work 3 years later. Selling isn't free. Agent fees alone typically run 5 to 6% of the sale price. On a $340,000 sale, that's easily $18,000 to $20,000 gone before anything else. Even if the home appreciated $30,000, half that gain can evaporate if you sell early. Time is the only thing that makes buying forgiving. Rush it, and the math turns against you. What if, instead of buying, you invested that $1,000 monthly gap instead? At 7 average return over 25 years, $1,000 a month grows to roughly $810,000. But that math only works if you actually invest the difference, not spend it. Most people who say I'd invest the difference describe a version of themselves that doesn't exist. This is why homeownership works for many, not magic, but discipline you don't opt out of. The bank doesn't care about your willpower. It just expects the payment. Homeowners have far higher net worth than renters, on average. True, but misleading. People who buy homes were often already ahead. Better income, stronger credit, more savings. A house can be a financial anchor. Sometimes it keeps you steady. Sometimes it keeps you stuck. Someone posts new house keys, and suddenly your rental feels like a waiting room. Nobody posts the inspection report. Nobody posts the argument about the roof repair. Only buy if you're confident you'll stay put for at least 5 years. Calculate the entire monthly cost, not just the loan payment. Keep an emergency fund intact after closing. Zero cushion isn't ownership. It's a slow-motion emergency. Compare local numbers, not national averages. Ratios swing wildly by city and neighborhood. Be honest about your financial behavior. Will you actually invest or actually spend? There's one more cost, opportunity cost. A down payment is money locked away from other uses. That doesn't make buying wrong. It just means the money has a job worth questioning. Picture two people, same starting point. One buys quickly, stretches thin, has nothing left over. 6 months later, an appliance breaks, and they own a home that owns them right back. The other rents longer, builds savings, and buys later from a position of strength. Same goal. Completely different experience because timing and discipline mattered more than the purchase. Renting was never the failure option. It's one tool. Buying is another. Calculate your true monthly cost. Compare it honestly. Ask if you'd actually invest the difference. Protect your emergency fund no matter which path. Ignore the social pressure entirely. You're not behind because you rent. You're ahead when your numbers match your real life.